The ceasefire is gone. Hormuz formally reclosed, and Brent settled at $92.50 the next morning. The market just shrugged off the biggest escalation since the war began. And that is the most important thing that happened this week. 4 days. Monday, Iran shoots down a US Apache helicopter. Wednesday night, Washington strikes Iranian air defense and communications infrastructure. Tehran retaliates, hits US bases in Bahrain and Kuwait. Kuwait closes airspace. Iran redeclares Hormuz closed to all vessels. Second formal closure since the war began. Thursday morning, Brent hits 95.46. Later on Thursday, 92.50. The market gave it all back in hours. Here is the question. Ceasefire gone. Strait reclosed. Global supply deficit forecast at minus 4.7 million barrels a day. The worst since the war began. So why is oil at $92? 3 answers. None of them are reassuring. Welcome to Crude Oil Desk, weekly oil market intelligence. This is issue 8. The ceasefire that was supposed to extend collapsed in 4 days. The price reaction tells you something. So does the data beneath it. Let's go through it. Trump claimed this week the US has seized and sold 100 million barrels of Iranian oil. We ran the vessel tracking data. Total Iranian crude exports since the war began. Approximately 91.3 million barrels, close to Trump's figure. But here's the problem. Proximity is not confirmation. Those volumes moved through Iran's own dark fleet. Seized and sold is a different claim from transited. May recorded 0 Iranian crude exits. The blockade was working. Then, on June 1st, 4 vessels moved 7 million barrels through the strait. A 5th crossed June 9th. No explanation. The most likely reading, pre-positioned tankers that moved when the ceasefire collapsed. Where those cargoes discharge determines everything. If they land in US-controlled custody, the claim has some basis. If they land in China or the Gulf, they were always Iran's oil. Watch vessel discharge data this week. Iran should be breaking. On paper, the numbers are catastrophic. GDP down 6.1%. IMF forecast, worst in decades. Inflation at 77% a year-on-year. Tehran claims 6 weeks of strikes caused $270 billion of economic damage against a $300 billion economy. 1 million jobs gone. 4.1 million people pushed toward the poverty line. The government is still standing. Why? Decades of sanctions built the workarounds. Overland freight rail through Pakistan and Afghanistan. Cargo trains from China. Northern Caspian ports that bypass the Gulf entirely. And Tehran accelerated crude exports before the blockade closed. Banking revenue while it still could. But here is the hard date. Capital Economics put Iran's accessible FX reserves at 3 months from end of April. That clock runs out around mid-July. If there is no deal by then, this stops being a geopolitical standoff and becomes a currency crisis. The market is not pricing that at all. The numbers. Brent Thursday, 92.50, retreated from the spike to 95.46 on the same day, given back in hours. Iran crude exports in May, 260,000 barrels a day, down 85% from pre-war. June global balance forecast, minus 4.7 million barrels a day, largest deficit since the war began. Iran FX reserve runway expires approximately mid-July. Trump's 100 million barrel claim, 91.3 million transited, seizure unconfirmed. Here is why the price being at 92 is itself a problem. A former CIA analyst told Bloomberg this week. Price stability at 92 gives Washington room to pursue more maximalist goals. At 130, the calculus changes. 92. Brent is keeping the war alive. Low prices remove the domestic political cost of waiting. The market's calm is not a signal that things are under control. It is part of the mechanism prolonging the conflict. 5 things to watch. 1. Iran FX reserves. Mid-July is the hard deadline. Watch for emergency currency measures, or IRGC, asset liquidation. 2. Brent at 95. It failed to hold Thursday. If it breaks and sustains above 95 on fresh news, the market is pricing physical supply impact, not just noise. 3. Discharge ports on the June 1st vessels. This week's vessel tracking data will tell us whether Trump's claim has any basis. 4. The Qatar-Pakistan mediation channel. The Qatari delegation flew to Tehran Wednesday. Silence after this week's strikes means the channel is either broken or on hold. Any joint statement is the leading indicator of a deal trajectory. 5. EIA Wednesday inventory data. The June deficit forecast is -4.7. Any weekly draw above 5 million barrels confirms the trajectory. That's issue 8 of Crude Oil Desk. The ceasefire collapsed. The price barely moved. Mid-July is the next date that matters. Subscribe, free, weekly, no noise. Link in the description.